and welcome to the CIMA Managerial case study Preseen analysis. I'll start off by telling you a bit about myself. My name is Peter Steff. I am the head of publications here at Astranti. I've been here about 2 years now, and during that time I have written many mock exams for T4 and the strategic case study, and indeed the managerial case study. I've also written mocks for many other financial training institutions and for CIMA themselves. During that time, I've also marked many case studies, particularly for T4 and the strategic case study. I've also been involved as both an author and an editor on many of the study texts, including E2 and P2. So, introductions out the way, I'll tell you just a little bit about how this is going to work. First of all, I'm going to be going through the Preseen section by section. This will be a few pages at a time, giving you my thoughts on the information that's there and what this will likely lead to in the actual exam. So they're picking out the key points as we go through, and also just some guidance on the industry itself, relating this back to companies in the real world at times. Now, as you know, the managerial case study is not based in the real world. It is a hypothetical company in a hypothetical universe, as it were. But having said that, real-world assessments can really help a student's understanding because it allows you to put context around what is being talked about in the case study. Also, I will be linking all the information back to many of the key business models. Now, in the managerial case study, it's not quite as technically based as, say, the operational case study or the objective test exams, but saying that, theory is still a substantial part of the case study and of the mark scheme. So it's important that you relate a lot of the information back to the theories, and this being the business models as the key elements of theory. We'll also talk through likely exam issues. So we will assess this based on the types of questions that CIMA have asked in the past, and also on the case study itself. For example, if there is a significant amount of material within the case study being dedicated to a particular topic or a particular business model, that increases the likeliness that they will ask a question relating to this on the exam. After all, what would be the point if they didn't do that? Also, I'll be giving you some little exam hints and tips as I go through this, coming off the back of which are likely to come up, and then what kinds of questions they would be likely to ask about such a thing, and how to answer those questions. Finally, I will conclude with a strategic analysis of the entire case study. This will go through all of the main key E2 business models and just generally assess the company and the case study as a whole. It's worth bearing in mind at this point, though, that CIMA deems key models from past papers such as E1 to be examinable at this stage. So we will also be bringing in some material from your past with regards to your studies. And then finally, my top 10 issues. This will be assessed based on the precedence of the topics within the case study and based on what kind of questions CIMA are likely to ask. So basically it will just be a countdown of my 10 key topics to make sure you've learned, because that's what I believe will be the 10 key issues to be examined in the exam. And also there is a video by Nick Best, the managing director here at Astranti, which essentially goes through all the key models and assesses both the theory of them and their application and the evaluation of them. So how will this all work? Well, as I mentioned, I'll be going through it section by section, a few pages at a time. I will be assuming that neither I nor you have any prior knowledge of the case study as I progress. As in, I will assess each page as if it's the first time I'm seeing that page and I haven't seen anything that comes later in the case study. This will help focus your learning, because if you try and read the case study as a whole, you often read things with hindsight, or you read things and you try and build a bridge between what you know comes later. So essentially, to get a real thorough understanding of the case study, we need to go through it as if it's the first time we've seen any of it. Now, it will help you dramatically if you go through the case study yourself before I go through it and make some notes. So what I'll do at the start of every video is I'll say I'm going to read from between pages 2 to 7. So I'm going to stop the video now and you read ahead to the end of page 7. I'll give you some key hints on what to look out for. And then once you've done that yourself, we can then go through it together and you can add my knowledge to yours. And that will help you build a better understanding of the knowledge within those pages. So that's covered my review there. And that relates back to the strategic analysis and top 10 issues that we will go through at the end. Now, the section by section videos will be comprised of about 6 or 7 videos, and the majority of them will be going through the Preseen, assessing several pages at a time, and then we'll conclude with 2 specific videos that will give an overview of the P2 perspectives within the case study. So this will be focusing on the general risk issues and things like that, and operational issues throughout the case study, and then also from the F2 perspective. So this will be a more in-depth analysis of all the financial topics within the case study. Now, as you're taking notes on the Preseen, please relate these back to the context of a shipping of a container company. As I mentioned before, they do not have to be necessarily in line with the real world, but it may help your understanding if they do. And also, you must be aware that the Preseen is just background information on the case. It is incredibly important that you read and assess the Preseen for the exam, but during the exam, you must not rely purely on the knowledge based in the Preseen. This is because the unseen material you are given in the actual exam may throw many curveballs on all the information you've learnt in the Preseen. And so do not go into the exam thinking, right, if there's a question on this topic, I'm just going to write all this information down because I know it's in the Preseen. That would be incorrect, because you must bear in mind the information given to you in the actual exam, which I've covered here. Right, now with that all done, let's move on to the actual case study itself, which of course is on the company Flote. Okay, so here we are. This is the case study, which I'm sure you are familiar with the front page by now. You've probably been looking at it, dreading actually having to go through it, but we've all been there. So let's start by having a quick look. Now, I'm going, in this initial first video, I'm going to scroll down until the end of page 5. So this will be where the extent of my analysis in the first video. So if you could now read down to the end of page 5, taking notes as you go. I want you to take pay a particular attention to a few models here, and those are pestle analysis, Mendelow's matrix, and Porter's 5 forces, because there is some real key issues for those models in these first 4 pages. So I'm going to pause the video now, and if you go away for 10 to 15 minutes and make an assessment on the material, and then we'll go through it together in a bit. Okay, welcome back. I hope you enjoyed reading through those pages. So now let's kick off the first video assessment of the Preseen. Now, when you first scroll down to this first page here, there's not much information for one whole page, and a common issue we find with students is that they look at this sort of page and they think, oh, it's just a few paragraphs, a few sentences even of information, of background information. It's not going to be relevant. A lot of students will instinctively just look for the big issues straight away. They'll scan through the Preseen and see there's a huge balance sheet here, so therefore, that's something they can pick up on. That's going to be a big balance sheet type question. But that's not necessarily the case. And in fact, there's a lot of information here which is very relevant to the company, and particularly from a background, from a building block perspective, there's a lot of issues you can pick out here which will be focusing your mindset as you progress through the rest of the company, for the rest of the case study. So look at this big first sentence here. So you are a financial manager in Flote. Okay, so this point is pays context to what is going to be expected of you and how you are going to be answering questions throughout the exam. So as a manager, some of you may be managers in your roles at your respective companies now, some of you may not be. Essentially here, you are going to be assessing resources, assessing operations in relation to the strategic objectives of the company. That is essentially what CIMA is saying the manager's role is. It's taking the operational resources and using them to fulfill the strategic objectives. Now, another point that you must consider for the case study exams, and this different to the previous exams in the old syllabus, the separate papers, the E2, F2, etc., is that there is not always a specific requirement. Now, I know some of you who have maybe done the old papers on the older syllabus are used to seeing the specific questions listed out after the unseen material. This is not going to be the case in the new case study exams. The requirement will be hidden, embedded within the material. So you must always take a thorough look at the question before you start answering it to make sure you know exactly what is being expected of you. There's an old teaching saying of read the question, which is in a sense means that no matter how good your answer is, if you're not answering the question, you can't score any marks for it because you simply haven't fulfilled the objectives and the requirements of the paper. So let's move on to some of this information about Flote now. Now we can see here that Flote is one of the world's largest transport companies. Its head office is located in Zealand. That's again comes into the fictional country, the fictional hypothetical world. But the company operates globally. Now, what you need to be thinking of when you see these words is that you now need to be aware that it is a substantial company, one of the world's largest. And coming back to what I mentioned to you earlier about reading through and with certain models in mind, we can now make an assessment in relation to Porter's Five Forces that we are a big company. We have a lot of power. Now, we haven't got any information yet on whether our suppliers or our buyers or our competitors are big, but we know that we ourselves are a big company with power. So that should be in your mind when you are assessing Porter's Five Forces later on. That we are no tin pot organisation, as it were. What you must also be looking at when you see the word globally is that should bring with it an inherent amount of risk. When we operate within a specific nation only, we only have to abide by the rules of that country. We only have to think about competitors of that country, laws of that country, and cultures of that country. But of course, when operating in an external environment with many other companies and many other cultures, we must always be aware of that. Sorry for that. So you get an idea of what you need to be thinking of when you reassess the rest of the case study. Now we have to be looking at everything, thinking, well, we could go into this market, but what's the exchange rate like in that market for our money, as it were? We now need to deal with finances overseas. We need to deal with cultures overseas. What if what we do here in Zealand is considered offensive or immoral in another country? That will stifle our ability to expand into that country. Now, the next part here mentions about being quoted on the National Stock Exchange. Seems like a fairly unimportant term. There's many large companies are quoted entities, and it's just sort of a matter of fact. But you should be looking at thinking, well, hang about, what could being on the stock exchange mean for this company? Now, of course, being on the stock exchange means that the company is publicly traded, which means we may not always be able to do what we want purely based on the directors and things like that. They will need to get shareholder approval. So that must always be considered. It does mean that if we at some point need to raise money, we have a good way of raising money on the market. So that would be important going forward. Obviously, we don't know exactly what's going on in the rest of the case study at the moment, or we shouldn't be looking through the rest of the case study at the moment, but we should be looking at this, thinking what could come later, and based on that, what we do now, or what the company is now. Sorry, got a bit tongue-tied there. So this should also link back to what I was saying about Mendelow's matrix. Obviously, the Mendelow's matrix you should have used in your objective tests up to this point. Essentially, there are two elements. the power and the interest of shareholders split into a four-square system. Now, a majority of shareholders would fall into the keep informed area, as they have a very high interest in it, because obviously their money is, but they don't necessarily have the power to do anything about it, at least on a individual level. Obviously, as they combine as a group, they become more powerful and then may move into that key player role, as it were, in which they have both a high interest and a high power. Now, in addition to shareholders, the company must also take heed of what is going on in the marketplace. Obviously, if the company makes a poor decision or is perceived to make a poor decision, this will affect the share price, this will affect the value of the company, this will affect the value of the shareholders' holdings in the company. So it's when you start trading publicly, you have to be very aware of all your actions, because they can have a direct effect on the value of the company. Even if you haven't lost any money, as in the company's money, you lose the perceived value of the company within the market. So this may be, for example, paying dividends. Now, some shareholders may be really happy that you've paid dividends, others may not, depending on their tax. But what also must be bear in mind, for example, in dividends and for other things, is the signalling effect of this to the market. So every decision, as the phrase goes, every action has an opposite and equal reaction. So everything you do will have an effect on the marketplace. So you always need to keep that in mind. Now, moving on, we say here that Flote's primary business is in shipping and managing the movement of shipping containers. Now, we do not know what other ventures, what other businesses the company may be in at the moment, but all we now know is that this is its primary business. Now, this means this particular business is crucial to the success and the survival of the company. So your critical success factors, as it were, should be everything that allows them to fulfill this objective and these businesses. So, I'm sure the case study will reveal more later on, but from an initial assessment, what could be the critical success factors of shipping and managing the movement of containers? Obviously, we need good ties with ports. We need to be able to load our ships, to unload our ships. We need to have the right technology to ensure moving the crates to and from the ships, etc. Because when you're dealing with these shipping container companies, I mean, some of these ships carry hundreds of millions of pounds worth of goods at a time. So the insurance costs and the insurance payouts, if something went wrong alone, could really damage a company. So it's imperative that everything is done well. And so to break some of these critical success factors down, what kind of things can we speculate will be imperative for that? Well, obviously logistics is going to be crucial. We need to have ways of getting the goods to our ships and getting the goods off of our ships, which on such a mass scale would be incredibly difficult. And that, of course, leads into technology. So our business needs to know where all the containers are going at any one time. They need to know where the ships are at any one time and the status of them. So we're building up a pattern here of all this kind of technology that needs to be in place for the company to be successful, to successfully operate its primary business. So there you have it for the first page. As you can see, we've turned what is essentially 6 lines of text into quite a substantial discussion, really. And this should be all building a building block in your mind for to which we add the additional material that we cover later on onto. So let's now scroll down to the next page. So this relates to the fictional country of Zealand itself. So as I mentioned earlier, it's a hypothetical country using a hypothetical currency, the Z dollar, as stated here. So when you see currency, you should automatically be thinking currency risk. This is something that will be applied, that should be applied throughout your answers as a kind of overarching risk topic. We're going to be dealing with many other countries, and so we have to deal with fluctuations in exchange rates and fluctuations in interest rates and inflation rates and all these sorts of things, both national and internationally, that affect a national currency. So that is important. Now this next line here is important as well, and this also relates back to the stock exchange bit that we learnt about on the previous page. So they have adopted the International Financial Reporting Standards, which is great from a uniformity point of view, particularly as the company deals with overseas clients and deals with companies overseas to have signed up to this agreed form of accounting, and that plays well from a customer perception perspective as well, that they know, the customer knows, or the consumer and the market knows that the company is dedicated to, the fairness in financial standards. So, and that is also quite necessary to continue as a stock exchange listed company. Now, next part talks a bit more about the history and the infrastructure of the company. Now, as you can see here, it is an industrialized country. So therefore we can assume good rail links, good road links, all these other sort of things that would be important for a shipping company. I mean, after all, the ships can't go on land. It sounds stupid to point that out, but essentially you could float your ship with your $100 million worth of material up to a port, and there'd be nowhere to take it afterwards. It's all just dumped on the docks, which of course would be of no help to anyone. So that is an important point of view, an important fact as well, that the country will likely have good rail and road links. It is a major exporter of manufactured goods. Obviously, it says here that it was a major for much of the 20th century. It makes no comment either way on whether it still is, but what we can look into that, what we can see by looking into that, is that it is a world player in this area, and that it's one of the key industries. It then goes on to say that it also depends largely on services such as shipping. Now, coming back to what I said earlier about remembering your models, this is a major pestle issue here. Now, what can we see from this particular paragraph in PESEL? Now, the obvious one is the E economy. Zealand relies heavily on its shipping economy. Therefore, it is important to the country that companies like this do well. And what else does that link back to? Well, it links back to P, politics. So we can then make an assessment that the government themselves value the shipping service industry because it is one of the major cornerstones of Zealand's economy. Now this goes back again to the Mendelow's matrix that we talked about earlier. So we now know that the government is going to have a high interest in what Flote does, as Flote is a major player in an industry and that is very important to Zealand's economy. So next we move on to this paragraph here relating to laws. Now obviously law in itself also fits in the PESEL analysis under, you guessed it, L. And law is very important, particularly for a company operating internationally. However, whilst it does say that different companies have different shipping standards, it does say that Zealand's is regarded as one of the strictest in the world. Therefore, we can assume, to an extent at least, that what Zealand does will be good elsewhere. But it is worth bearing in mind that that is not always the case, and you must also pay respects to the laws of other nations. You know, what is okay in your country is not essentially okay in another, and it is your responsibility to improve or to change if you wish to trade with that company and that country, sorry. And what we also need to think about here is move away from what is literally on the page here and just think about the shipping industry in itself and what kind of laws could be applied to that. And I think the big thing that sticks out to me is health and safety in all aspects of shipping. So this goes from the loading to the voyage to the unloading and back again over and over. Now with a company that operates with such sizable assets, things that can weigh hundreds and hundreds of tons, and that's just the containers alone, and can possibly risk millions and millions of pounds worth of damage, or millions of Z dollars worth of damage, it's imperative that health and safety is kept to the highest of standards. And as a little tip here, an exam tip, that there could be a question relating to health and safety, something along the lines of how could Flote improve health and safety performances. You may be given some sort of information on accidents and the cost of accidents and things like that, and the cost of risks, and then you could do a assessment of the impact versus the likelihood, and all these kind of risk management models to help improve on that. So that's just a bit of a tip here. So now let's move on to the next page. It's the containerized shipping page. Now, much of this information in the first paragraph is a lot of just background information on the shipping industry. There is nothing to really suggest there'll be too many key issues in this particular paragraph. But I must point out to you, for example here, 20-foot equivalent units, you may be expected to know certain terminologies. Oops, sorry. So essentially, just be aware that they may, when they bring, if they bring up things such as TEUs in the exam, that you are aware of what they're talking about, because they may not necessarily explain the terminologies again in the exam. So what I thought I would do on this particular page here is talk to you a little about the containerized shipping industry as a whole in the real world, and we'll see where Flote, who Flote ranks alongside. Now, the biggest shipping company in the world is Maersk, which I'm sure you're aware of. It's the very big, very famous one. And this followed closely by the Mediterranean Shipping Corporation, based in Switzerland, of all places. And finally, French company CMA. Now, between them all, these companies operate over 1,000 container ships, 500 of which at Maersk alone. So, you can see some of the size of the players in this industry, which should be bringing you back to your Porter's 5 forces analysis. Of competitive rivalries. So essentially, we know that we are going to have to deal with some real major players on the international scale. So then also brings you back as to what kind of companies would use a shipping company. Obviously, Flote themselves load and unload containers and ship them, but are they also agreeing with companies to ship their goods? Admittedly, there is nothing here nor there so far to explain either way. However, looking at the industry itself, Maersk, MCS and CMA do not particularly do that. They, however, have major customers such as DHL and Nippon and other logistics companies like that who provide them with business. So we then can look at our 5 forces from our buyer power and think, well, actually, despite being a huge company, do we have that much buyer power? I mean, there are several enormous logistics companies and there are several enormous shipping companies. So DHL may turn around and say, oh, we're not going to ship with Flote because they charge us too much. We're going to ship with MCS instead. So this should all be kind of building a tapestry of your 5 forces analysis as we progress through it. Now, coming back to the actual paragraph here itself, relates back to what I mentioned earlier about heavy goods vehicles and railway wagons being required. So this should be, you should be thinking now about the infrastructure of certain countries. Is there going to be, or is our growth going to be limited by shipping out to less industrialized nations because they do not have these facilities? We also have another health and safety issue here, in that special cranes and hoists are needed to lift the containers securely. So that in turn links back to unindustrialized nations where health and safety laws may be slightly laxed in comparison. Now moving on here to the final page in this portion of the video is more related to just infrastructure in general. It's quite just a factual page. There's not too much information on here, but we shall go through it nevertheless. Okay, so what's important here is that a lot of freight companies, a lot of docks permit heavy goods vehicles and freight trains to stop alongside. Now, this is particularly important for a company like Flote, because we do not know if they have their own HGV freight trains, etc. So this is good for the company, as it allows for immediate unloading of the ship. They do not then have to make arrangements for transport beyond that. So that's a key point there to be picked up. And thus also here minimizing the number of times the container has to be handled. Now this goes into the old moving parts argument, as in the less moving parts, the less chance of something going wrong. So that, from a efficiency and a safety point of view, is very important. Now, scrolling down here, it mentions about container ships being able to carry a large variety of products. Now, so far, all we know is that Flote is a container ship company. We have no information here nor there relating to other types of cargo that it can carry. So we need to think about that as well. As coming down here in the final paragraph, it mentions that you need specialized ships for things such as oil and grain and wheat transporters as well. Now this is an important point, because as we just said, we do not know if Flote has the ability to take this cargo, because all we know is that it is a container ship carrier. So you should be thinking, when you see this, is this a possible venture for Flote? Is this a possible market they expand in? For example, you may be given a piece of unseen information that says that carrier and container ships are a decreasing industry, whereas grain and coal carriers is a growing industry, and therefore you may be asked to do some sort of assessment on whether Flote should venture into this industry. And another part here that relates to that is the section here just above about container ships having cranes to allow unloading, but there being specialized ones on the docks that are quicker and more efficient. Now, given my knowledge of past papers and previous case studies, this to me seems like it could possibly be an NPV type question. For example, you may be asked by the examiner whether it is worth investing in new cranes, in these specialized container cranes. You'll be given an NPV calculation, and it'll be saying here nor there how much money it will make, how much is there to be gained, what the risks are, and you'll have to consider that alongside all the kind of non-financial objectives as well. For example, will these help with containers, but then if we decide to move into tanker ships, will they be of no value? Or are there only certain types of ships it can be used on, etc.? Will they take up space on the docks to the extent that the company will be charged extra by the docks for having them there? It's all a rich tapestry of points that may be brought out in an exam. So essentially here we've got what appears to just be some basic information on container ships and on the shipping industry, but particularly these last two paragraphs here, we can really pick out some potential question areas the examiners may focus on regarding the growth of the business and particular projects that may be invested in. So that concludes our first video here. I hope you will join me next time, where we will be carrying on with our assessment of the managerial case study Preseen. Thanks. Well, thank you for listening. I certainly hope you found the video helpful, and I hope you found it as enjoyable as I've enjoyed going through it with you. If you would like to know more about the Astranti managerial case study video analysis, please visit the website. That's www.astranti.com. The videos contain over 4 hours of assessment on all the case study, also a full-blown overview of the P2 and F2 issues. We also contain a full strategic analysis of the case study as a whole, and also my top 10 key topics likely to be examined in the actual sitting, which you will be doing in May. It also contains a full-blown model review that's been performed by Nick Best, the managing director here at Astranti. So please visit the website, and I hope to see you again soon.